Well, joining me now to take a deeper look at what's impacting stocks is Rebecca Walser, founder and CEO of Walser Wealth Management. Rebecca, great to have you on the show.
Thanks for having me. Glad to be here.
All right. So the final week of the first quarter, what's your takeaway here for stocks?
You know, it's really mixed. We've definitely had a 5-month run, but that also can be negative. And historically, when you look at the S&P going up 25% in 5 months, it's usually indicative of either pre-recession or some kind of asset bubble, historically speaking. So a lot of people see a lot of runway still with the $6.1 trillion in money market funds and excess liquidity in banks, commercial banks that we've been, comparatively speaking to what it used to be before the coronavirus. And so they still see a long runway. But there's still a lot of headwinds, Kristen. So I think this market is just really getting ahead of itself. When it was reassured on Thursday, when the Fed came out and showed the dot plot still showing 3 rate cuts for this year, you saw the market really sort of take a breather and be like, okay, we are going to get some rate cuts. It just is going to be a little bit slower coming than we thought and starting a little bit later than we thought, pushing it back to June at least. And so the market has different things, headwinds and tailwinds at the same time, which makes this a very hard market to actually call.
Interesting. So for any investors who might be on the sidelines, Rebecca, do you think it is a good idea to dip their toes back into stocks, or would you kind of wait to see how the inflation data plays out?
Yeah, I think we'll get PCE on Friday, even though you're right. For Good Friday, the market will be closed in observance of Easter. So I do think that it's really hard for me, Kristen. We're at the tops, right? It's really hard for me as a money manager to buy in at the top because we want to look for opportunities, especially when the market is performing and has run up so quickly in such a short amount of time. So we would more look to buy opportunities and dips right now, and I think that we will have plenty of those in April in earnest.
Interesting. And what would you be buying in those cases?
Well, I do still think that NVIDIA has a long runway. I do think that AI has a very long runway. It's in its infancy. If you look right now, we are seeing NASDAQ pull up back this morning because Intel and AMD are being impacted by potential China regulations that is going to impact imports of semiconductors. So there is going to be headwinds. There's going to be other countries that are trying to get in on this AI craze that's really driving the U.S. market higher. So we're going to have to be very selective and look for opportunities. But that is not to say that AI is not going to give us a nice long runway of good returns, but it is going to be a very difficult time because it's being inserted into so much geopolitical uncertainty, and that will come to a fore as the election comes closer. So that's why we're a little bit cautious still.
Interesting. Well, we've been hearing from some of my guests during this slot, Rebecca, that they expect the rally to broaden out. I think many people do see a lot of opportunity in AI and think that that's the future. But what's your take on whether or not we might see some outperformance or at least some catching up by other stocks and sectors in the market beyond technology?
Yeah, I did see some broadening out in consumer staples, which also is recessionary. When you start to see like the durables and the staples, outperform, what services and, luxury items, and you start to say, what's happening here? So what we're starting to see is with credit cards and, rates balances being so high, rates up so high, and we're seeing auto delinquencies and credit card payments becoming delinquent. We know there's really still a bifurcated economy, Chris, and there's still really a lot of people that are still using services, still going on vacation, still buying luxury items. Those are the haves. But then there's a large part of our country that has got 2 jobs and are really, really dealing with this inflation. It's really becoming difficult for them. So it is a very much still bifurcated economy. And yet, yes, we will see broadening out, but that could just be recessionary in terms of consumer staples and things that people must buy even when recession comes. So will we see broadening out or will we see geopolitical effects? I'm really more concerned this year about the geopolitical effects as we get closer to the election and that really having a severe impact on the world, actually, and certainly our U.S. market.
Talk to me more about that, what your expectation is when it comes to some of those challenges, Rebecca, and how that would impact stocks.
Well, I just think any kind of escalation. We obviously know that we've had this Ukraine-Russia situation happening. It's the 2-year anniversary in February this last month. So it's been a while, but we do see different things happening now. Some escalation. Look at what happened with the Moscow attack last week. So that's an escalation. We still have the Middle East. And then we have China's moves towards Taiwan, which seem a little more hostile than we're used to with planes and things. So any kind of escalation in the Middle East, in the Ukraine, Russia, or even China, Taiwan, any of those situations would make the market pause and think, geez, are we headed towards some kind of global conflict that we aren't prepared for? Any kind of World War III talk, and the market's going to get very, very freaked out. Then there's other things that are happening as we move closer and closer to the election. You know, all these things happening with former President Trump in New York and the seizure of property. And that's really causing some consternation with business people and entrepreneurs and companies in New York. How is that going to play out? Is that a headline risk that's too great for hedge funds and institutional money for investment in New York? So we just have a lot of unusual things happening, as they always do, Kristen, in an election year, which means that the market is going to be a little more volatile than we would normally expect in a 2024.
And how should investors plan for that, right? I mean, we've seen what's been a solid run. And I mentioned earlier, 5 straight months of gains is what we're looking at here. Consecutive gains in the market. You called it. You know, we're right near a top. So do you put money in now, perhaps some volatility in April, expecting perhaps that we get a rate cut in June? How does the rest of the year play out in terms of when investors might expect some of those volatile bouts?
Yeah, I'm absolutely expecting April to start to get quite rocky. And I think that's where we will have some dips and we will have some buying opportunity. Don't forget the corporate blackout window is not buying right now. We're in a blackout period for buybacks until April 26th. So we don't have that institutional money that's going to stay and kind of buoy any volatility and cover over it. So it's really down to the retail investors right now. And they are the ones that obviously, and unlike the machines, get very skeptical very quickly. And so any kind of news that is not great is, and even PCI on Friday, you know, this kind of thing is going to start seeing some volatility concerns, which will give us some dips. And that's where we will have some buying opportunities. I would also encourage investors to really look at, you know, stalemates that are safe, stalwarts, rather, that's what I meant, through any kind of recessionary times, which would be gold. Like we're seeing gold having its highest run up ever to all-time highs because a lot of the central banks are still buying them. A lot of countries, a lot of sovereigns are saying, hey, you know what? There is some kind of a concern here about global credit. So let's buy some gold and have some hedges. So I would encourage people to look at both waiting for dips and buying some opportunities. AI is still a long runway, but it's a long-term hold with volatility. And then when you see volatility, buy the dips, but also look at maybe some hedged commodities like gold.
Interesting. What's your take on cryptocurrency, Rebecca? We see Bitcoin, believe it or not, even as the stock market's down fractionally today, Bitcoin is up 2%.
Bitcoin has got a long runway. Love Bitcoin. I think, decentralized cryptocurrency is going to be here to stay. The institutional investment through ETFs has broadened out. It's democratized. People buying Bitcoin, they think it's more safe now, even though it's not changed at all. It's just that it's institutionally available. So that is increasing demand. And don't forget, Kristen, we have a halving next month. This April 19th, it goes from 6.25 Bitcoins per mine to 3.125. So we are going back down to our another halving. And so that means the supply is going to shrink. Demand is higher. So Bitcoin has a long runway. It's going to be a long-term hold. Don't expect to get rich overnight, but I think people will be happy if they buy Bitcoin and stay with it. I wouldn't make it, it's still speculative. So I wouldn't do massive amounts of Bitcoin, but I still do think that should be part of your portfolio as well. Yes, absolutely.
All right, Rebecca Walser, founder and CEO of Walser Wealth Management. Rebecca, thank you.